Welcome back. Hope you're having a good morning. Well, as promised, our research team is standing by to take you through all the top stocks that we're tracking for you. Good morning, ladies and gentlemen. Well, Abhishek, you go first. Tell us, how was Axis Bank's numbers?
Well, Nigel, Axis Bank numbers were a mixed bag. Business momentum is softening on a YOY basis. So if you take a look, deposit growth of 9.8% YOY is perhaps the second lowest that you are seeing in last 16 quarters. But sequentially, the deposit growth was good at 7% sequential growth. It was one of the best in last 8 quarters. However, advances growth was at just 7.85% YOY, which is the lowest in last 16 quarters. And sequentially as well, it was just 2.5%. So you saw weakness over there in housing portfolio as well as the auto loans, which actually declined on a sequential basis. Now, cost to income ratio or operating efficiency is the worst in last 5 quarters. Cost to income ratio was at 47.8% versus 46.2%. The good part in the result was the asset quality. So slippages came in about 4,800 crore, down about 11.5% sequentially. Asset quality continued to improve. So gross NP ratio is the lowest that you are seeing in last 39 quarters at 1.28% versus 1.46% in the previous quarter, and that's thanks to write-offs. Write-offs have been one of the highest in last few years. Net interest margin improved for them by 4 basis points on a sequential basis to 3.97%. Risk-weighted asset to advances ratio, now that's the highest that you are seeing in last 5 quarters, coming in at 111.4% versus 109.8% in the previous quarter. So PNL versus ARPOL, the NI is in line with ARPOL. However, lower provisions have aided the PAT to be ahead of ARPOL. So numbers seem to suggest that Q4 was a tepid quarter, but stock has valuation comfort as it's trading at price to adjusted book value of 1.8 times FY26. Back to you.
Okay, all right, got it, Abhishek. Thank you very much for that. And that's Axis Bank. Let's now find out how Tech Mahindra fared. Reema, good morning.
Well, revenue was a miss compared to consensus expectations, margins slightly ahead. On the top line, the company's revenues declined by 1.5% quarter-on-quarter, worse than what the street was anticipating. The company said delay in deal closures, a renewal deal in high-tech space got delayed, which led to the sequential decline in the top line. Margins improved by 30 basis points to 10.5%, and the deal wins were fairly robust, up 7% sequentially, 60% higher year-on-year. The company, remember last year under the new management, had set out a vision FY27, where they said that by FY27, they want to get to margins of 15% and above industry growth rates. So the company is reiterating that despite the macro uncertainty. They said in FY25, we built the base. FY26, things will stabilize, and FY27 is when they will reap returns of that. But in a nutshell, top line a bit subdued, margin performance continues to be good.
All right, Reema, thank you very much for that. Well, let's talk about SBI Life, and I think numbers were super strong. Second quarter in a row. Yash is here with details. Yash, morning.
Well, contrary to the street expectation of weak numbers from SBI Life Insurance in the fourth quarter, the company has been able to deliver a complete inverse of that as far as, comparing the numbers with the street expectation is concerned. With respect to new business premium, it's come as a slight beat. Total APE has come as a big beat to what the street was anticipating. Retail APE, the numbers are in line with street expectations. Value of new business, there's a big beat which the company's been able to deliver. And finally, the best for the last, a strong margin performance, which is much ahead of what the street was anticipating. Now, let's get into individual numbers. As far as new business premium is concerned, the numbers have been weak, but as I said, much ahead of the street estimates. The new business number is down 24%. The number that has come is 9,324 crore rupees. Total APE, the street was anticipating a contraction, but there's a growth which has come of about 2% at 5,450 crore rupees. Retail annualized premium equivalent, that has grown by 8% at 4,800 crore rupees. Value of new business, as against a contraction which the street was anticipating, the number has grown by about 10% at about 1,660 crore rupees. And finally, as I said, the best for the last, margin is up 216 basis points, coming in at 30.46% as against 28.3%.
Thanks a lot for that, Yash. Well, Reema, though, is joining us to tell us about LTTS as well as Mphasis. Numbers look good, Reema?
Well, for LTTS, no. For Mphasis, yes. So on LTTS, the company's top line missed expectations. The street, given the acquisition of IntelliSwift that they'd done, the street was hoping for, or the consensus was about a 13% plus top line growth. The company delivered 10.5%. Again, the problem is the macros. The company in the conference call said ramp up of deals got delayed, some deal closures got delayed, and that impacted the top line. That said, they've said FY26 will be a better year than FY25, and they've reaffirmed their medium-term target of $2 billion in deal wins. In terms of revenues. Onto the deal wins, highest ever. TCV closed in Q4. That's a positive. Margins have come down, and the company holds on to its margin guidance of 16%. Mphasis has had a very strong quarter, the highest quarter-on-quarter revenue growth in 3 years. The top line is up 2.9%. TCV, that's the deal wins highest in the last 7 quarters. The pipeline is at record high levels, and the company, in terms of a margin guidance, is talking about 14.75 to 15.75, and they're saying they will be industry leading in terms of the top line performance in FY26.
Okay, all right. So Mphasis is definitely a stock to watch. Let's see, it could maybe really pop, given the numbers that you just described. Thank you for that, Rima. Back to Abhishek. SBI card, unsecured lendings, poster child. Abhishek, how are the numbers?
Well, credit cost continues to remain elevated for them. Take a look at the key things that they have reported in Q4 FY25. The quarterly spends are up just 11% YOY and 2.5% quarter-on-quarter. But receivable per card, which is down both YOY and quarter-on-quarter, suggesting that the spends have actually continued to decline. Card receivables, that is AUM growth, is at 9.8% YOY and close to 2% sequentially. They have been able to improve their net interest margin both YOY and quarter-on-quarter, and this for the first time in many quarters that you are seeing such an uptick, because of the fact that 50 basis point increase was seen in yields on a sequential basis. However, the annualized credit cost continues to remain elevated at 9% when compared to 7.6% in the same quarter last year and about 9.4% in the previous quarter. The revolver rate continues to remain flat at 24% when compared to YOY or quarter-on-quarter. The NI growth is 7% YOY and about 2.3% sequentially. PAT is down 19.4% YOY, but it's increased by 39.4% sequentially. So in the con call, the management did say that, a credit cost of 6 to 7% range is quite far, and they do not expect it to be achieved in the near term. That could put the pressure on stock and trade today. Back to you.
All right. Abhishek, thank you very much for that. Back to Rima, Cyient and Tanla platforms. Rima.
Well, Tanla continues to have slow growth, but there is a pickup compared to the prior quarters. And the key reason is OTT, that's the WhatsApp platform for communication, has started delivering. So WhatsApp revenue growth was 31% quarter-on-quarter and now accounts for nearly 29% of its overall revenue. Margins and profits on the flatter side are fairly stable. Cyient, on the other hand, has had a disappointing quarter, both on the revenues and on the margins, and the company is not giving a guidance for FY26. Cyient is a company which gives you a quantitative guidance. This time they're abstaining from it. They say that while there are some uncertainties in the near term, we are working very closely with our customers in navigating through the current challenges. We expect this to last at least through the first half of FY26. So Cyient missed on Q4 and no FY26 guidance, and they expect the uncertainty to impact them in the first half of the year at least.
Okay, all right, Rima, thanks a lot for that. Well, let's hop across to Vinny. Vinny's tracking a couple of counters for us. Vinny, IEX and Macrotech, how were the numbers?
So for IEX, it's a mixed set of numbers that's coming in Q4 FY25. We're seeing a bit of a miss on the revenue front, and that is mainly due to the lower per unit transaction fee, is what Motilal Oswal is highlighting. Other than that, profits were in line with estimates. But in terms of volumes for the full year, when you look at it, which data has already come previously, 47% growth in terms of volumes for FY25, and for Q4, the volumes have seen a 2 times growth on a year-on-year basis. So for IEX, what's important is the volumes data that comes out as well every month. And other than that, in terms of regulations, in terms of the market point of view or market coupling, are more important data points. As of now, we are expecting a bit of a red coming in on the screens because there was a miss in terms of the revenue growth for the company. Other than that, Macrotech developers, Q4 operational update had already come in, so we know in terms of revenues, profits, collections, what to expect. But for FY25, just on an overall basis, pre-sales saw 21% growth, which was surpassing the guidance that they'd given for FY25. Collections was also quite good at 14,490 crores, and additions in terms of new new projects. That was also about the FY25 guidance. For FY26, they've set a pre-sales of around 21,000 crores, new project addition of around 25,000 crores GDV is what they're talking about. So guidance also seems to be good in terms of the growth strategy that are given in the past, and we're expecting a bit of a green on the screen today.
Okay. All right. Got that, Vinny. Thank you very much for that. Let's quickly recap our list of stocks to watch then. The ones that have positive news flow around them are Axis Bank, Tech Mahindra, SBI Life, L&T Tech Services, Mphasis, Tanla Platforms and Macrotech Developers. All of these on earnings, of course. Stocks with negative news flow, SBI Cards, Cyient and IEX. Okay, so that's lots of stocks and lots of earnings. Let's now move on to commodities and find out what's happening. We have Manisha joining in with the latest. Manisha, good morning. So are they talking? They're not talking? Who's talking? Who's dealing, not dealing? Beyond comprehension. But you tell us, what did the commodity markets make of all this China-US tango?
Oh, well, absolutely. So it'll be the skepticism over this US-China trade deal is exactly the reason that you have the gold prices coming back in favor. We did see prices go decline to 3,270 day before yesterday, but we are trading back above $100 on the higher side at 33.50. Still off those all-time highs of $3,500 an ounce, but that is also because the dollar index seems to have gained a bit. There are conversations that U.S. perhaps is closing or nearing a trade deal with countries like Japan and South Korea. That progress has led to dollar index coming back, and that's weighing not just, or rather capping gold gains, but it's also weighing on the crude oil prices, which are headed for a weekly decline. Crude also is bothered with the oversupplies coming in from OPEC and allies. In the metal space, you have copper prices off 3-week highs. There's a bit of a decline that we've started Asia with in sense of aluminum and zinc as well. Silver prices also are off 3-week highs. Steel rebar China is trading at a 7-month lows right now. There is increase in supplies when it comes to steel, but the demand is quite uncertain, and that really seems to be weighing on in case of ferrous metals there. In all of this market, there are only a couple of things which I can see trade in the positive in Asia right now. One is coffee, which has gained 5% overnight. The other is cocoa, which has gained up by 2% overnight. Apart from that, most of the commodities either flat or trading with marginal decline.
All right, Manisha, thanks a lot for that neat wrap. For the time being, we slip into a short break. On the other side, we have Sid Khemka, Motilal Oswal Financial, who will be joining in for some fundamental stock talk. Stay with us.